Let's try.
Yeah. Hi, Thato. Good morning.
Hi, Lorato. Good morning. How are you?
I'm fine, thank you. Welcome to back to Swero TV.
Thank you. Thank you. I'm happy to be back.
Emma. So today, just to talk to the viewers, today we are actually having Tata back. We're going to be talking about investing and saving up for emergencies as a business this time, not as an individual, as a business time. Today we're not talking about personal finances, but we're talking business finances this time. As you all know, I have been making a series about how you manage your business finances and how, as a business leader, you need to be understanding your business finances as well. But today we're going to be talking how can, as a business, save for the future as well as invest. Because yes, you can as a business and as a me as well, you can do that, and it's important that you do it, especially during now COVID times. This is the money that we could have been using as an emergency. So now we're starting to see the importance of having emergency funds as a business as well. Yeah, right, Kata?
Hmm.
Yeah. So
Absolutely.
yeah,
Mm.
what do you think? What do you think is so important for businesses to actually have a backup plan as a savings? What's your opinion on that?
I think it's just as critical as it is for, any human being or any individual to have a backup plan.
Yeah.
I think it's even more, or it should be even an even higher priority for businesses, simply because it's not just you that depends on yourself. You
Mm,
have others, your employees, who depend on you as well. So for a business to have some sort of backup, or financial backup, is actually quite an important thing. And not just for the rainy days, because you have people depending on you, and also suppliers, or where your clients who need you to be able to come through, but
absolutely.
also for the growth and the expansion of the business as well.
Mm,
If, as a business, you're not setting money aside, whether it's for as a backup or emergency, or for expansion or growth purposes, you are actually in a bit of a red zone. It means if something comes up and something happens to you, we don't know if you'll be able to recover.
yeah. Yeah, absolutely. All right. So I want us now to talk about the options available for the businesses to
Hmm.
save. But this time, let's talk about the product that is available for businesses to save for emergencies, right? Emergencies
Hmm.
such as revenue is interrupted, cash flow is interrupted. What options does Bifm have? What products does Bifm have for the businesses to actually put their money aside? Because what I normally advise my clients is put at least 10%, just like your salary, 10% of your revenue aside every single time you receive revenue. Because the thing is with businesses, they actually receive revenue at different times. It's not necessarily monthly. So you will get that they're also getting revenue in the middle of the month, or revenue 2 weeks into the month, or whatever. So I always say whatever that you're receiving, even if when you're receiving 1,000 that week, take that 10%, that 100 put it aside. Put it aside. So
Mm.
definitely they need, if we need to have that kind of emergency account, they need to have easy access to it, so they can just keep sending money there at any time via internet banking or however way that they can do it. Do you have any products that
Mm.
they can do that?
Of course. I had previously spoken about our Bifm Money Market Fund. And
Yeah.
I think for purposes of emergencies, whether it's for an individual or in the case of a business, it is still the most ideal fund for that.
Yeah.
The Money Market Fund is great because, on one hand, it gives you that flexibility or accessibility that as a business you would need. It's
Mm.
money that you can call on, as and when you need to, not necessarily you have to wait for a certain period before you can access it. But also it allows you to top it up as you are able to. Like you mentioned, irregular cash flows can be a thing, or irregular income flow can be your current challenge. So that's something that the money market fund would allow. So you can top up as and when you're able to, and not necessarily commit to a fixed, every month we're going to set money aside.
Mm.
And the great part about it is, even though it allows you this flexibility, you get return, you get
Yeah.
interest on it, and it's actually quite a relatively competitive return that you get on this when you compare to similar products in the market, which
Yeah.
I would mention.
Yeah.
And our interest on the money market fund is calculated daily but paid out on a monthly basis. So You can, have your money parked in there for 3 weeks or 3 months or however long, but you know that the short term that you've had the money parked in there, you have earned interest on it, which you probably would not have if it was sitting, idle, not invested, or yeah.
Yeah, absolutely. Because I think we really need to touch on that because many businesses actually have their money sitting on either check accounts or call accounts. Now, we do have businesses that will say, yeah, but the call account earns us interest. And then I would say to the client, and I would say, but the thing is with the call account is that as much as it earns you interest, you still have easy access to it. You see, and the interest is not necessarily going to be the same when you actually take it to a proper investment account. You see, where you have actually put money aside, you don't have easy access to it. You know that money is only for when there's emergencies, right? So can we just get into now the money market? Is it the returns on it, right? The interest returns on it, is it
Mm-hmm.
a little bit better or better than the call account?
Um, our benchmark at the moment actually is what we call a wholesale call account. So
Yeah.
basically, or yeah, the return on a wholesale call account. So we look at what call accounts currently offer, and right now, consistently we've been offering something better than that.
Yeah.
So on that hand, it is a competitive advantage, or it is something that a business can take advantage of. But the other thing, which is actually what you highlighted and is very relevant, is having the money separate from your transactional account. When the money is linked to your transactional account, it means with any transaction, you're basically dipping
Yeah.
into whatever's sitting in your call account. But
Yeah.
if you're saying this is something for emergencies, then it is important that it's separate,
Yes.
because then you only call on it in the case of an emergency. If you are cash strapped in terms of cash flows and you need to pay salaries,
Mm.
then this is something you can now dip into and say, okay, let me plug this hole or this gap in the interim while I'm waiting for the income to come in.
Absolutely. I mean, and as well, I think we should also stress the part that if, as much as we need to, for example, what are the emergencies that can occur for a business? An example of those is definitely salaries. Because
Mm,
sometimes we do get payments very late from our customers. We all know that, and that interrupts cash flow. And you still have salaries to pay. You still have obligations to pay. You have suppliers to pay. So what we would advise is that try and calculate exactly roughly how much a month are your monthly fixed payments that you have to make. This is rental. This is and then try and see that you at least have that aside, into this particular savings account or investment account. And the good part is that as much as you put that money aside, at least it's still earning interest when you've actually put it aside. As much as you'll have the access,
exactly.
yeah. The good part is that it's earning interest while you have put it aside, and you also have easy access to it. I get it.
Yes.
Thato, yeah. So that's what we would normally advise. And how many months should one have a backup? At least 6 months. That's what we would advise. But how long can one accumulate 6 months worth of savings over time? Over time. So you
Mm,
continue, like I said, take 10% of every single income that you are coming in. That every single income, just take 10% and take it there. Now, Tata, let's talk about the initial deposit that a company needs to make and a minimum amount that they can pay monthly.
invest.
Yeah.
Okay. So again, it's really, really flexible. It's not like because now it's businesses, we sort of give them a higher standard.
Yeah.
And it's really because we understand that businesses start somewhere. Not
Yeah.
everyone starts just bam as a large, successful
Mhm.
corporate. So even the startup person, or even the small SME that's just beginning, the minimums are quite affordable. In terms of a minimum lump sum amount, it's 1,000 Pula. And then if the business wants to commit to a regular contribution, then the minimum is 200 pula per month.
Okay.
But either way, these are minimums, So just as you were saying, if you're thinking emergencies, if you're thinking this is money that needs to be able to cover my monthly expenses, should I get into a fix, then you need to look at that larger amount and have that as your target. I need to build 60,000, or I need to have 100,000 set out, because those are that's how much my expenses come to. So in that situation, it's saying I'm going to put aside only 1,000 won't necessarily do much in terms of covering your emergency. But if you're thinking I need to set aside 60,000, then maybe on a monthly basis you're putting aside 10 or 20 or however much you're able to, until you get to that level that would be able to actually cover your emergency costs.
Yeah, absolutely. And this should be part of your monthly budget. If you're actually doing, let's say you start your budgets, most companies will start setting their budgets just before the next financial year starts. So, possibly include that. We're going to be taking a 10% of the whatever forecasted revenue that you've actually forecasted, and put it monthly into our savings account, right? Yeah,
Exactly.
plan
And
it
it's
well.
savings. So it's
Yeah,
not like,
yeah,
yeah, sorry. So it's not like you're giving the money away. You're
yeah.
just setting it aside, for a future purpose.
Mm,
So as much as in the budget, it looks like you have less cash flow in terms of what you're able to work with. It's a reserve. You're building reserves here.
yeah,
Yeah.
absolutely. So let's get into the other options that we actually have in terms of what else can we use the money market fund for? I mean, I know I was really, really intrigued with the gratuity um, plan. The one that you can put money aside for the gratuities, or even schemes for your employees. Let's talk about the gratuity plan that you can have for employees, because half the time, with accountants, we accrue it. And accruing it, it doesn't necessarily mean we've actually put the money aside. No, we're just planning it as an expense for the business. But is that expense actually saved? Because when it actually comes, and you have to pay severance to this employee who's decided to go, or it's time for gratuity to be paid, have we actually put the money aside? This was actually a very interesting one, and I liked it. And I said, this is actually very important for businesses to hear. Tell me about it, about the
Yeah.
gratuity plan that you have for companies.
Yeah. So our gratuity solution is actually, or it was built or established around exactly what you've described.
Yeah,
We know that when contract employees leave, there's that obligation on the company to pay them that lump sum,
yeah.
whether it's gratuity or severance. And all we're saying is, first, as a company, it means you have this liability in your books.
Mm,
Should someone leave, I am obliged to pay them out a certain amount. And what we're saying is reduce that liability by actually on a monthly basis, instead of just doing an accounting accrual, set the money aside,
mm,
the actual cash.
mm.
And then that way you have peace of mind about it, because should someone leave, I've already accumulated what is due to them up until this point,
Yeah,
as opposed to having to worry about, I have 5 employees leaving me at once,
yeah,
and cash flow wise I don't have enough
yeah,
to cover this expense, because it
yeah.
can be quite a big outflow in your book. So that's the one feature about it. The other thing is, we also feel it can be a value add, or an incentive for your staff, or a way of actually making your staff feel special in a small way. So because you're using the money market fund, it does mean the money that you'll be setting aside for gratuity or severance purposes on a monthly basis
Mm,
will be earning interest, will generate return on it. So when you pay it over to your employee, you're not only giving them what you had set aside, which is your legal obligation, right, in terms of the contract, but you're also giving them whatever interest the money has earned over and above that obligation, which
mm.
is quite a nice value add, we feel, for your staff.
Yeah,
And if it's a case of a contract renewal, I mean, I'm sure that staff member is going to feel, oh, I am valued. I didn't just get
yeah,
what they have to give
absolutely.
me, but
Yeah,
they gave me a little bit more. Yes.
yeah. It's like a bonus, basically to to the gratuity or the severance. Yeah.
Yeah,
Absolutely. No, that's actually quite a good point that you are making there, because we normally just accrue the money, but the accruing does not mean the money is there. We're just
yeah.
accruing the expense, but it doesn't mean necessarily mean the money is there. So it's actually quite a good one, which I think a lot of businesses could use this idea on it. And I'm gonna start using it actually on my clients. We're gonna start talking about literally accruing and putting the money aside just in case an employee quits,
Just in
or
case.
yeah. And also not necessarily employee quitting before the time, or also when the gratuity time comes, you need to be paying out
Hmm.
that gratuity, and you actually have the money. And during these uncertain times, it'd be good to actually have the money aside. Uh, um,
Exactly.
yeah. All right. So let's talk about the employee schemes that you were thinking for the businesses as well. That what offers do you have there? Saving schemes for the employees, that when we actually encourage our business owners to also encourage employees to actually as well save money aside. I feel like this is such an important thing as well as a business, to encourage employees to also yeah. So it pause there for a bit. Yeah, we're talking about the schemes, the savings
Saving
schemes,
scheme.
yeah, for employees that are available, encouraging companies to actually encouraging companies to encourage employees to save money. What is the offer there for companies?
Okay. So just a little bit of background from our perspective as Bifm. We do feel that, companies can, not that necessarily the onus is on them, but we do feel that there is a level of responsibility that they can take in terms of encouraging their staff and their employees
Mm,
to save,
mm,
to invest, to be a little bit more intentional about managing their finances
mm,
better.
mm,
So part of what we're always saying is we're trying to inculcate a savings culture just
mm.
among Botswana at large. I mean, in the last interview I
All right, it had paused there again. Let's continue. You were saying you actually just, I think you might need to repeat what you were saying there for a bit.
okay.
Mm,
Yeah, so I was just saying, we do feel as Bifm that not that the onus is necessarily on the company, but as a business, there is some responsibility that you can take in terms of at least trying to encourage your staff and your employees to be more intentional about managing their finances better.
yeah.
So one way is obviously, helping them save, actually intentionally, kind of driving this thing to say save for your for yourself, for your future, for your kids.
Mm,
Don't let your monthly income be just that, my
yeah.
monthly income, and then I spend it and I'll wait for the next
Mm,
one. So
mm,
in terms of our employee or staff saving schemes, how we've done it is we're basically saying, as the company or as the business, you can facilitate the saving part. So
mm,
you can be the link between Bifm and your staff members.
mm,
And what that does is, because they'd be saving by way of, say, deduction from source,
mm.
it means the employee can't go and stop the debit order at the bank, because
Yeah.
why? On a monthly basis, it's actually coming directly from my pay, but it's
Mm,
being set aside for me, for my benefit or for the benefit of my children.
yeah.
The other good thing about it is it's transferable. So it's not locked into the relationship between the employee and the employer.
Oh, thank God. Yeah.
If yeah,
Good. Yeah.
so if the employee were to leave, the ownership or that account can basically become independent of the company. And that employee or that staff member would now be a direct client of or investor of Bifm.
Mm,
And the other plus side is now you have flexibility as a staff member. You can choose between the number of funds that Bifm has to offer. So it's not just the money market that you
yeah.
can make use of. You
Mm,
can also consider the more medium to long-term funds, which are, you would say, do not choose those for short-term investing. So whether that's, I'm going to go for the balanced prudential fund or
mm,
the Little Education Fund, the
yeah.
Yamasa Junior Fund, or even the local equity.
Yeah.
Now you can consider your own personal objectives as a staff member and say, okay, well, currently I really do need to set something aside for my children's education, or I need to set aside something that will supplement my future retirement earnings or savings, and then use one of those funds for that purpose.
Yeah, absolutely. I mean, this is actually really good. We should encourage companies to actually encourage employees to do savings. As an offer, actually encourage it, so that they also have backup on general. Actually, it's actually quite a good one.
Yes.
Yeah. So what's the
Hope it helps because
yeah.
sorry, hope
No.
it helps because now when your staff members leave, ga batho ba le ba setla hela, looking
Eh,
like they've never had a monthly income. Once Mapata, they know for, okay, well, I have an investment, or I have something that I'd set aside in Bifm. Now I can see how I can use it to sort of keep making my life better, rather than now I no longer have a monthly income and I don't know what to do. I have nothing saved. I have nothing set aside
yeah.
for whatever may come next in life.
Yeah, absolutely. All right, now let's talk about this is another thing that I normally talk to my clients about. Besides emergencies, we also need to make investments. Yeah, aside, take a bit of our revenue and actually invest. And what happens when we do that is that sometimes you'll find out you want to grow your business in the future, but you've actually invested money to do that. You can actually use that money to grow your business and open another subsidiary or open another branch, however way that you'd like to grow your business. Let's put the money aside for us to grow the business. Can we talk about the options available for businesses to actually even invest their money on those options available for the business? Because I really like encouraging businesses to do that. So when we actually talk about those options, I am going to talk to them, my current clients, about it, because I really like encouraging that, because instead of getting a loan, or you can even get a loan but as a top up to what you have, to grow the
Yeah.
business. Instead of actually depending on the bank or up totally, you can actually just take a bit of that investment and say, I'm going to use this for this. I need a top up of maybe 50K, instead of actually going all the way and going to get 200K or a million. You have something to top, then it becomes less expensive. What options do you have in place for the businesses to do that?
So on a more longer term scale, I mean, we've obviously
Yeah.
spoken about the money market fund, which is great for,
Emergencies.
emergencies. Yeah. And also parking your operating or your, what's the other word for it? Your working capital,
Mm-hmm.
just so you're earning interest on it while you're not necessarily using it every week or every
Yeah,
day.
yeah,
So on a more longer term scale, it is important to invest back in your business, and investing back in your business can look like you buying more stock, increasing your inventory levels, or it can look like you accumulating money for some time so that you can go after a bigger project, whether that bigger project is expansion in terms of branches, or is I don't know, getting a new warehouse,
yeah.
or expanding in terms of your offering. Yes, but
Mm-hmm.
a lot of the times taking hold of such opportunities requires you to have built up some level of capital.
Mm.
Expansions generally require that. But if you plan it right and you know how much time you have on your hands to work with in terms of setting money aside, then you can consider one of our other funds. Obviously, it does mean just be careful, because they don't have the capital preservation feature that our money market fund
Yes, yeah.
does.
Mm.
Instead, these are exposed to market volatility, so you will encounter ups and downs in terms of the capital or the principal that you've invested.
Yeah.
But the nice thing is, all of our funds, the Balanced Prudential, the Look After Education Fund, Local Equity Fund, the Yamasa Junior Fund, all of them, you get your statements on a regular basis. You can log on to our investor portal to view your balances and kind of monitor the performance and how
Mm-hmm.
the funds are doing.
Yeah.
And for the Balanced Prudential and the Local Equity Fund, if you get to a point where you are happy with the returns or the growth that you are seeing on the fund, you can
Mm.
switch over now to the money market, where you will no longer be exposed to the ups and downs in the market. And then
Yeah.
from there, we would say, yes, now you can deploy those funds into whatever expansion or whatever reinvestment you're doing into the actual business now.
No, absolutely. I mean, I think what's important also to remember, just as individuals, when we're investing, such as businesses as well, and when we're investing, is that when you invest long term, that means literally long term. Means patience. It means not easy access. Hence, we mentioned the very first one, which is the money market. That okay, that one will earn you a bit of interest, and you can have easy access to it. Now, with the other ones, now we're trying to invest long term and get good returns after a period of time. That's exactly what it means, long term, and let it grow and actually benefit you in the process, and let's not get impatient. That's why we're not going to put all our money in one basket. We're going to have some of it in the money
Because if
market.
you disturb it, you may not.
Yeah, absolutely. Yeah, I think our conversation has ended. This is it. This is this is all we have to, with the instability of our internet here in our country. Um, we have pulled through, but really, really appreciate you, Thato. I think if we have any future conversations, we'll definitely invite you again. If to tap into your brain about your new products, or what else can we do in terms of helping people invest? Because the idea here is to encourage both individuals and businesses to actually invest money, and as well as have money for backup. Like now it's COVID, a lot of businesses didn't have backup, particularly for
Mm.
yeah. So now we know, we've learned from it. Let's move on. Let's now know that okay, now on we should be having a backup, at least 6 months worth of savings, or even a year worth of savings, to ensure that we have a backup for everything, that all the expenses, at least fixed expenses, including salaries, and we can maintain our lifestyles. Yeah.
Exactly. Yeah, to get
Yeah.
that peace of mind and also just the stability.
Absolutely. So I really, really appreciate you, Thato. Thank you for your time on a public holiday.